This is today's Daily Market Comment by Ref Boyajian. I'm Christina Marujos, and thank you for joining us at XM.com. Trading got off to a muted but somewhat more optimistic start on Monday in a week where volumes are expected to thin out in the run-up to Christmas. Markets are still trying to digest an obstinately hawkish Fed on the one hand and increasing warning signs of an impending recession on the other. Friday's flash PMI releases for December painted a worrying picture about the direction of the global economy, with the U.S. prints slumping further below 50, while a slight improvement in European ones provided little comfort. The gloomier economic outlook, combined with growing indications that price pressures are easing, have led investors to price in a lower terminal rate for the Fed than what policymakers penciled in only last week. This has proven to be another setback for dollar bulls, especially against the euro, which is benefiting from rising Eurozone yields on the back of the European Central Bank's hawkish meeting last week. The dollar has been having a somewhat better time against the Japanese yen lately, establishing a floor in the 134 yen region. But that could be about to change, as the Bank of Japan may be setting the stage for an eventual exit out of ultra-accommodative policy. The Bank of Japan will meet on Tuesday, likely keeping monetary policy unchanged. However, there is mounting speculation that policymakers will signal a review in 2023 of their controversial yield curve control policy, which has kept Japanese yields pinned near zero. European stocks and U.S. futures were edging higher on Monday in what could be one last bid to spur a Santa rally. However, a more probable scenario is that today's gains are simply a correction following 3 straight sessions of losses on Wall Street since last Wednesday. In Asia, stocks had little to cheer about as the rapid spread of COVID across major Chinese cities raised concerns about disruptions of supply. However, the government's attention seems to be mainly on the economy. The country's leaders have pledged to boost consumption and investment following the conclusion of a 2-day annual economic conference. However, the positive headlines about more stimulus have failed to provide any lift to domestic stocks, with the benchmark CSI 300 index closing 1.5% lower today. This was a Daily Market Comment at XM.com. Have a great week.